My question was regarding dividends and like say suppose I'm having a company who is like not a property company, another company who is generating profits and having like good amount saved in it, and then I'm going to transfer that profits into another company, maybe which is buying properties. So what is the best way to structure that? I'm sure I know you touched on it, like dividends and director loans, but maybe you can talk more about like what is the best way where you can maybe give a loan from one company to another and how you can structure it, like the general advice.
Yeah. Um, with if you have an intention to start another business or you want to invest your profit into another business, then it's best not to take the dividends, because if you are going to take the dividends, you are going to end up paying 7.5% extra tax. It might be best off to loan from your company A, which is making a profit, to your company B, where the funds are required, and charge the interest rate. Now, HMRC has their standard interest rate on a yearly basis. I think this year is 3.5, sometimes it's 4%. So what, let's say your company is company A, which is making a profit, and then you want to transfer the profits into company B. So company A is going to loan the money out to company B, and they are going to charge an extra probably 3.5% interest on that loan amount. Now you wouldn't mind paying that 3.5% interest because it's coming from one pocket to another pocket anyways, because both the company is your company. And just by giving a loan to one of your other company, you have avoided 7.5% dividend tax, which was not required for you to take the money out and then put it back into your other company. So always transfer the money between the company as an intercompany loan, rather than if that is the goal, rather than taking the money out and paying extra tax on it.
So we have to structure like a loan agreement from
Yes.
company A to company B. And
Yes.
say suppose we are transferring like 100K from company A to company B with 3 or 4%, whatever interest rate you mentioned. It has to be like Bank of England interest rate, or we can decide it ourselves as well.
HMRC's interest rate.
HMRC's interest rate. So does that transaction needs to happen back after the, say, suppose we have done 1 year's contract saying that company A is giving it to company B. So the company B, does it needs to do the transaction back after 1 year, or can we make the contract of like 3 years, 4 years, 5 years?
Yeah, okay. There is no time limit on it. The only thing that comes into play, let's say company A is about to get dissolved or liquidate, or something is happening to company A, then company A has a receivable amount of 100K. And there might be some trade creditors, or there are creditors which you want to pay the money. So then they would force you to take the money from company B and pay their liabilities, or pay us whatever is outstanding. Apart from that, you can linger on the loan as much as you want.
Okay.
Because these are intercompanies.
Yeah, and I understand that this can happen only if like you are the director of both the companies. What if there is another company where like you have set up a joint venture where there is another director? So the company A can't give the loan to company B then in that case?
No, you can still do that. But one more thing, I did say HMRC's right, but HMRC also wants to look into your current situation. Let's say if you are getting a market interest rate of probably 12% and 13%, if you go for an independent lender to get the loan and company A is only charging 3.5%, then they say, no, it has to be the market interest, whatever the interest you're going to get.
Okay.
So, but it won't affect you, because whatever you are paying from one company, it's coming to your other company anyways. So in terms of money wise, you're not losing anything. Now, the other question, what you said is if it's an other company, any associated companies, they are okay. Associated companies, even if you have a shareholding of 25%, is okay. But anything else, they would like to see the market value. But again, this is allowable. It's not like you can't do intercompany loan with a third party. You can still do it, but again, rules still apply if the third party, let's say you have transferred the money into company B, which is not owned by you, right? And that company B has gone bust, right? Now, what would happen with company A's loan? Because that loan was still about to be received. At that point, what HMRC says is they would consider that director has taken that loan and they'll charge you 32.5% tax on it.
Okay.
Okay. As a director's loan overdrawn, or maybe you want to declare a dividend and then clear it off from there.
Mm.
So in the end, HMRC is okay because they are not letting you lose out, or they are not letting you just maneuver the whole amount and avoid the tax. You can't just avoid it because people are very creative, especially us. We are super creative. So we say, let's transfer everything to company B. We'll extract the money from company B and tata bye bye. But it doesn't happen like that. Once the company B gets dissolved or liquidated, the liability comes on you.
Because we are the directors of the
Yes.
company.
Yeah.
Okay.
So this one.
Yeah, so we have received one question in the chat box. Yeah.
So because this is related with your question, so go to second.
How we can have split?
Go to this one first. That's what I'm saying, because this from joint account for buy-to-let property. So I think what she meant here, that if even if it is possible that deposit come from joint account for buy-to-let property, so is it still possible?
Yeah.
Maybe you
joint
can
account, but then who is buying it?
Yeah.
That you need to look into it. That is it under the limited company or is it under your personal name? Or
Okay.
that property would be jointly owned. But lenders are not bothered about it, because if they say that it's a joint account, but this money belongs to me, this doesn't belong to a partner, they are okay with it.
Okay. So I think, do you want to unmute yourself? I think Ms. Deshpande, you can just, ask the question.
Hi, Usman. Hi, Pari and Kushal. Thanks for this presentation. It is a query. As a husband and wife, we have a joint account, and we got one property as a buy to let. Okay, we put the money for that deposit for that buy to let has gone from our joint account, but my husband is a higher taxpayer and I am a lower taxpayer. So to get the income tax benefit, can we split the rent or whatever profit we are getting from the property as 90 and 10?
Yes, you can, but the property has to be under both of your name.
Yes, it is under both of our names.
Yes, then you can prepare a trust deed, which is very small document, like a 2 or 3 page document from a solicitor.
Okay.
There is a form that you need to submit to HMRC. It's called Form 17. With the trust deed, submit it to HMRC within, probably sometimes they do take longer, but normally within a month or two, you will receive a document back from HMRC, and they would say, listen, we have approved your percentage, and this is the date from where onwards you can apply that percentage, and it is achievable.
And if property is purchased couple of years back, still
Doesn't
we
matter.
can do that.
Yes.
Yeah, and now if you want to purchase couple more, still we can do the same thing.
You can once you have purchased it, but I would always recommend look into the limited company format as well.
Oh yeah.
Because you should not be in a position where you end up paying so much tax because your husband is already at 40% bracket. So even that 10% that he's paying tax on is on 40% plus your.
At that time, one of the financial advisor from agent, he suggested if we are going for 3-4 properties, then only it will make sense to go.
Hello,
Yeah,
Chintan.
means
Yeah.
at that time he suggested if we are going for 3-4 properties, then only it will make sense for having a limited company. But if we are going for just couple of properties, then that won't be that profitable to form a limited company.
How long ago was that advice given?
It
Because it
was
might be very,
2 to 3 years back.
yeah, at that time, things were slightly different. The reason I'm saying things were slightly different is because the restriction on mortgage interest was not there. So then, yeah, you can do that in terms of saving some sort of admin cost because companies have slightly higher admin cost compared to the personal. But overall, if you look at it, limited company, again, it's something that we need to look in detail on your personal circumstances as well. But limited company might be best suited to you because you also need to look into IHT scenario and you also need to what is the benefit of buying it under your personal name because you're still going to pay 3% extra surcharge on stamp duty and you're still going to pay the same 3% extra surcharge on limited company as well. So
Oh
my
yeah, makes
advice would be
sense.
look into it.
Thank you very much.
No problem. Thank you.
Guys, guys, you can start putting your questions or maybe unmuting. So maybe we can go ahead with the questions. And Usman, I think I have another question here. So, say suppose if somebody is having a property in their own personal name, and they are also having a property company which is having a portfolio of properties in there, and they want to add that property from the personal name into that portfolio. So, what is the best way of doing that, or is it the best way of selling the property and then using that money to invest into another property?
Uh, Again, the thing is, it might not be advisable to transfer that property into limited company. Reason I'm saying it is because of the stamp duty mainly. I don't know what would be the market value of that property. You are going to pay the full stamp duty again.
Mm.
And then in these sort of circumstances, what we do is we check the cost versus benefits, where we are going to calculate that how much tax are you going to pay extra if the property is under your personal name compared to how much is the saving you are going to have in limited company, and then look at the stamp duty figure. Once we compare both figures, then we'll say, okay, within 2 years or probably 3 years, you'll be back to square one. So it is still advisable. But let's say if the property value has gone up tremendously, it might not be beneficial for you to transfer that into limited company.
Okay. Yeah. Depends upon the personal situation and
Yes,
finances
yes.
again, isn't it?
Yeah.
Yeah. Do you want to take that question?
Yeah, so there is a question from Vivish. I think, Vivish, would you mind to unmute yourself if you want to ask the question, or do you want me to run the question for you? Um, I'll just ask the question what he has put on the chat box. So
Yeah.
what he is saying that I have bought a property which is currently my first property. I'm looking forward to buy another one for my residency and to make the first one a letting one. Does it benefit forming a company and transferring the current home to a company? Both of us are a part-time employees earning 20K each.
It's the same.
You can have that option. Reason I'm saying it is your first property is your main resident at this point of time. Now, what we would look into is how much is the second residence? What is the value of the second residence? Because you might want to take a benefit of 300K tax free in terms of SDLT if you convert your first main residence into the second one. But then you will have to pay a 3% surcharge on the first property. So, hypothetical example, let's say his first property is at 200K at the moment. If he buys second property now, second property is going to pay another 3% surcharge, right? If the second property is more than 200K, which is probably 300K, then he'll end up paying 3% surcharge on £300,000 for the second property. At this point, he can make an election where he says, listen, my first property was my main residence. Now this property is my main residence. So HMRC will say, okay, that's fine. If you want to claim the second property as the main residence for STLT purposes, then pay us the surcharge on the first property, which is beneficial, probably 200,000. At this point, if he is paying 3% extra surcharge on the first property, it might be benefit for him to move that into limited company, because in limited company he's going to pay exactly the same SDLT as he's going to pay now. So it's a chance to kill a bird.
Yeah, hopefully that answers your question, Vivish, and
So,
hope you're happy with this.
so Usman, one more question. So, what do I need to do to transfer this company to, transfer this form to the company? What are the procedures?
You
So,
need
do I can I transfer on a higher rate? So, or do I need to transfer at the same rate that I purchased?
Okay, I think I did not cover this, so very good question. SDLT is only on the market value. So let's say if you have got a property whose with market value is 200K, and you say, oh, he's my friend, I'll sell it for 125. SDLT is going to be charged on 200, which is the market value. They won't charge you on the selling price at this point of scenario. So even if you hype it or lower it, hike it, you don't want to hike it because you will be paying extra tax. Even if you say the value of the property was lower, blah, 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 they would like to see the market value because it's your own limited company. They want to see a report from an external surveyor that what have you done to value your property and paid the tax on it. And then your solicitor can handle the SDLT forms and everything. But it has to be at market value.
So, what is the external agency that does the property valuation?
Oh, there are so many surveyors.
Or just normal surveys that we go with?
Yeah.
Okay. Thanks, Usman.
No problem. Thank you.
Thank you, Usman. So, guys, if you have a question, then you can just unmute yourself and ask the question. Take this opportunity.
Usman, I have add-on question to that. So the mortgage that I took in my personal name, is that be transferable to the company when I do if I form the company?
You can, but do look into early redemption charge. Because sometimes, let's say if you have fixed the rate for 2 years or 5 years, and you come out of that mortgage early, they might charge you extra. So it's best to look at your term and the agreement and then make the informed decision. Don't just transfer it. But you can get the mortgage on a limited company. It's not an issue. Because all the buy to let, what they say is the person should be earning more than 25K, or the joint income is more than 25K, and you're putting 25% deposit, they are happy. Most of the lenders are happy. So you shouldn't have any problem.
Okay, the joint income should be just about 25K, is that right?
Yeah. Some lenders do require that.
So roughly, so forming a company and transferring all these charges, what is the normal, rough charges if the property is valued around 150K or 100K, just say? Forming a company and transferring all the legal charges, etc.
Forming a company is like, you can do it yourself, probably online. It's not expensive thing. But transferring it, the conveyancing needs to be done, and your solicitor would quote you that this is what their price would be. I don't think so. It would be very high price. It should be in the region of 1,000 or less than that probably. Uh, but it's only one off. They'll also handle your SDLT as well.
So they do the solicitor charge me for selling and buying, because I'll be doing the both, isn't it?
Yes.
Okay.
But the charge would only be one, because in both sides you are their client.
Okay.
So it's not that like seller pays 750 probably or buyer pays 750. You won't be paying 1,500. You'll only be paying probably 750, or maybe they charge £100 extra or something like that.
Oh, okay. That's what I want to know. Thank you. Thanks.
Usman. Actually, I have a one question. So, quick one. Because you were saying that if we rent a room in our house, right?
Yes.
So all the benefits and all. So I want to know if it is just allowed for a room, or some people, they make an outhouse and create a separate entrance and stuff like that. So it is still allowable or beneficial for that thing, or it just for the room?
Technically, it's your main residence. Some people do form another property, probably outside the garden or something.
Yeah.
This is a separate property at that point.
Okay.
So renter room relief would not come into that, because it would also have a separate A or B number as well.
Okay.
So then what you're doing is you are converting your main residence into different portion of flats probably, and then getting it. So it won't come into that regime.
Okay.
It has to be your main residence. You might want to sell the separate property or separate portion that you have built separately as well, because you can also go back to your solicitor and they can change it on land registry. Then you have got two properties and you can sell it separately as well.
Okay. And if we have that outhouse, just a room, and there is no any like no bathroom or no kitchen or anything, so it has a separate entrance, but still, if it is just a room, so is it still considering into the room?
Yes. Because then it would be connected to your main residence. They'll have to come for kitchen and bathroom
for the bathroom.
So it's still connected. Yeah.
Okay, so that's good to know.
Yeah.
Thank you.
No problem.
So guys, I think if you okay, there's something and lots of doubts. Okay, good. So I think everything has cleared.
I have one more. Sorry, Barry. I have one more follow-up question on that. So, Usman, if my property price is market value of my property, for example, if I bought the current house for 130, and the price down the line 6 months down, I'm just trying to sell the property, and the value of the property is 150. So I'm transferring at the same rate to my company. So will I have to pay capital gain on that, or how does it work?
Because it's your main residence and you always lived in that property, so zero CGT. You're not paying any capital gains on it because you have always lived in that property. Remember, I talked about PPR. So principal private residence, there is no CGT.
Okay. And transferring my company, so my residence to my company, does it come under money laundering or any of those things?
No,
is there any issues with that?
No. It's purely legal and allowed. So many people do that. When they go on to their next main residence, they always try to take the advantage of PPR relief. And this is the point where you want to transfer it into your limited company. Because why I'm saying it's beneficial, because when you sell it, let's say you bought it for 130, you're selling to your limited company at a market value, which is 150. Maybe 10 years down the line, when you sell it, your cost price would be 150, not 130. So that 20,000 pounds, which was no CGT you paid, you actually got it for free.
That's great. Thank you, Usman. And is there any minimum time that we need to hold the property?
For the main residence, HMRC do look into it. Recommended is 1 year, but you should be in the property for 6 months to 1 year.
Thank you very much, Usman.